and you can see all of the safe deposit boxes around me. So it's going to be a little modified. We're not going to have as much time for Q&A today, but I wanted to address something that we've already begun to address, and I certainly have addressed it in the past, and that's the repo market. I just want you to know, without digging into it and making you a technical expert, but the banks have been and non-banks as well, have been borrowing from the government, from the Federal Reserve rather, at the highest levels that we've seen. Why? Because on the way up, all that debt and leverage makes everything look fabulous. But on the way down, it destroys that wealth very, very rapidly. So I'm going to read this to you, and the dispute centers on asset-based financing. We've talked about this before, and you know, you always have to be careful of how they name something, because quite honestly, it's usually just the opposite. And I really need you to be aware of that so that you don't fall for that in the future. So what is asset-based financing? It's a type of private credit deal where lenders extend funds secured by cash flows or receivables from the borrower's business. So it works, again, as long as everything is going hunky-dory, there's no problem. But when it starts to reverse, that's when it's like a tide, right? As long as that tide is high, you can't see the garbage on the bottom of the ocean floor. When that tide goes out, that's when you see it. And we are at a place where the tide is going out. And remember, the central banks only have one tool, and that's money printing and interest rates. And they're lowering the interest rates into an environment that is already easy money. So I gotta tell you, we have seen nothing yet in terms of inflation. But the market has ballooned alongside the broader private credit boom, now topping 1.7 trillion globally as non-bank lenders rush to fill a void left by the traditional banks. But a series of collapses, which we've talked about, include the First Brands and the Tricolor Auto Group, both accused of pledging questionable assets. See, we've talked about this as well. In that reach to yield, right? 15 years at zero interest rate policy. So companies were reaching and taking more risk and not looking at really what was underneath the surface. Oh, in a zero interest rate environment, 4% interest is great. I even had somebody ask that question when I just did the event with Greg Manarino. Well, but gold doesn't pay any yield. Gold doesn't have to pay you yield because it is the single safest thing that you can do. It runs zero counterparty risk. All of this other stuff runs all counterparty risk. So what we're witnessing is the implosion of a system. And what's the government's answer? What's the central bank answer? Printing more money, that devaluation trade. Let's make the dollars that are out there in the US or other places also have dollars. But whatever the currency, whatever the current fiat money is in your local, wherever you're watching from, you just make that worth less and less and less. And then that makes those fiat money assets look like they go up. And even gold. Gold has not changed. It's the value in terms of the government's debt-based money that has changed and been devalued. And this is why it is so critically important for you to become your own central bank. And even if you make the choice to hold intangible wealth, you need to do whatever you're comfortable doing. Proper diversification requires you to hold a certain level of gold so that if those other things go away, you're covered. It doesn't matter. So now, since we're kind of short on time, Do we have some questions?
Yeah, so one of the questions that came through from Colleen Allen, she asked, what is the name of the smallest pre-1933 USA circulated gold coin one can purchase?
$1. Now, the $1 coin, which is teeny weeny, I've shown it to you a bunch of times. It's a 20th of an ounce of gold. It can make a lot of sense. But again, when we're doing that strategy, this is, excuse me, I'm just going to put my phone down. Thank you. Okay, it's a layered approach. So you want a variety of sizes. And again, remember, gold and silver in any form is monetary at its base. So it's always best to call us, establish your goals, and then we can help guide you as to what kind of gold and what kind of silver is going to support that best. But the smallest is the $1 gold coin, which is a 20th of an ounce of gold.
Okay, next one comes from Rob on the Road. Says, if QT ends, where will all the added liquidity go? T-bills?
Oh my goodness. QT is quantitative tightening, and they want you to believe, they being the central banks, that they've been tightening because they've been running off their balance sheet. In other words, all of that, the government bonds that the central bank bought, the Fed bought, they've just been allowing them to mature and not reinvesting that principal or those dividends. So the liquidity, QT is supposed to be pulling the liquidity out of the system, but it really hasn't been. And I've shown you in the past, and you can go to the FRED, F-R-E-D, the Federal Reserve Education Department, and you can put in there the liquidity conditions or the credit conditions, and you're going to see that there hasn't been any QT. Now, where the QT comes in is in the crisis like we're witnessing today. That liquidity, because of those defaults, have been sucked out of the system, which has forced those non-banks and also the banks. This is not just a non-bank issue, because remember, those non-banks, that private credit, that private equity has been going and getting money from the banks. And that's the problem, is the contagion. So when they see that these private events are starting to fail, that's where the money is sucked out and the liquidity is put back in the system through the repo facilities and through dropping those interest rates down. So they're basically giving you free money. And keep in mind that interest rates are also an indication of the value of money. And it was at zero interest rate policy for 15 years, and it's going there again. And it'll probably go to negative rates, even in the US. So that's where the liquidity is coming from: money printing, lowering interest rates, and the Fed's facilities that they just create out of thin air and create all of that money to push back in the system so that you don't know. Because you should also remember that a lot of that liquidity comes from money market funds. Money market funds, even though they're sold to you as $1 in, $1 out, well, that's not really the case anymore. And that is the plumbing that lies underneath the global financial system. So all that flow of cash, they need your deposits into that money market fund. And we saw this in 2008. We also saw it again in 2020, or actually September of 2019, when the plumbing actually got clogged. That could very well be happening right now with these implosions. So if you're sitting in money market funds and they are not government money market funds, you should be concerned. And if you can get out, get out. And remember, they've also put in fees and gates to prevent you from wanting to get out. Because the key in here is, how much do we have to charge so that you decide to stay put? It's not worth risking your principal. It isn't.
All right, and this one says, this one's more of a statement, but I'd like to get your opinion on it. Silver EN7KL says, money printer started up and gold and silver get slammed down. Makes no sense.
Makes all the sense in the world. There are a few things that happen in here. Number one, a rise in gold and silver prices are an indication of a failing currency and a looming crisis. I hope everybody watching this can see that we are already in crisis. That's one thing. Another thing is that the gold and silver are used, especially inside of the system. So this is just paper gold and silver. They can create as much of that at will as they want to. And those contracts, spot gold, spot silver, that's what you're really talking about here. Those are simply paper contracts. And remember, it was back in January when, especially the Bank of England, but there was a lot of physical gold and silver that was shipped over here to the US and then delivered out. And we talked about the backwardation. In other words, current prices being higher than future prices because entities do not want to risk not getting their gold and silver. Because the futures contract, the assumption is there's a specified date at a specified price that you can, anyway, in theory, take possession of the physical metals. But the US was not really about taking possession of the physical metals. It's just trading those paper contracts or those digital contracts back and forth. So if an area over here is imploding, well, they get what's called margin calls. And if they've done this using those contracts as collateral, and they have to liquidate those paper or those digital contracts in gold and silver to meet those margin calls. But the physical world does not work like that. In the physical world, it is simply supply and demand. That's why I show you the charts on the PCGS 3000 and the ultra rarities, because that's the only place where I can really show you what's happening in the physical demand world. If you're looking at what Wall Street puts out, the spot gold contracts, the spot silver contracts. So when they say, when you're listening to Bloomberg or CNBC, or even when they put across the ticker gold, put spot in your mind, put spot in front of that so that you are seeing that that's a contract price and has nothing or not much, because it does have a little bit to do, but not much to do in the purely physical world. And there's bullion that will reflect what happens in those spot contracts more. The collectible coins do not. That is purely a supply and demand market. And look, I think diversity in everything makes a whole lot of sense. Even though I'm not, honestly, I'm not really that diversified because I don't own any of those intangibles. But I do have dollars. So diversification is key.
All right. The next question comes from the Resistance Chicks. Wow, PG here. We are in a vault. Cool. Love the hair, Lynette.
Yes.
Dressed for Panama? She says, it's calm. I'm used to you being more exotic, but your outfit matches your surroundings.
Thank you. And my curly hair is because it's very humid here and it's going to do it anyway. So why fight it? And thank you very much. And yeah, it's really interesting and fabulous to be able to do this in a vault in Panama. It's a great country. We just got here yesterday. We're going to see some more things and we'll do some recordings. So stay tuned.
Okay, the next one comes from MVHBD7BC. How are we going to stand for using gold as physical money when state after state want to use a credit card with stored gold and silver, i.e. Texas, Arkansas, Utah, etc.?
Well, a big part of what we do in the Citizens for Sound Money is putting together education. Because quite honestly, most government officials, whether they're elected politicians or they just work in the administration and they don't really understand sound money. It is a step in the right direction, But this is also why I say that you need to become your own central banker. And again, the states can pressure the federal government. If we can get the laws passed, even though they're not perfect, but it is a start, it is a stepping stone, because we need to get redeemable gold back in the system again. That's the real battle. But they're never going to start there. And so at least if it's legalized and we remove the taxation from sound money, physical gold, physical silver, and even if the states start, at least they've got a store of the gold and silver. Then we can fight to make that redeemable. But it is a start, because we need the states, we need the individuals to demand it. And how do you do that? You position out of that fiat money into the physical metal. You demand it. Now that's growing. It's a grassroots effort. And then we also go from the top down. But the more states that we can get to legalize gold and silver in the US, the more states that we can get to legalize it, puts more pressure on the federal government. You got to start somewhere, even if it's not perfect. To me, at least that's a start and a step in the right direction. But I wouldn't depend completely on that either. You need to be your own central bank and have that in your possession. And even here, because I always say, if you don't hold it, you don't own it. But you can't hold, it's diversification in the way that you hold it here. And so in a private vault, you have a layer of security there as well. And I'll be doing more on that as I learn more. So if you have any questions about them, or you think of something in the middle of the night, write it down. We're going to visit another vault a little bit later today as well, and we'll take some images from there too. And yeah, we're going to explore everything so that you're always diversified.
Crypto Rob asks, are you in a real vault?
Yes, I am. I'm in Atlas Vault right now, yes. And there is tons and tons of security. It was really interesting as you kind of go through a sell to sell to sell to even get back here. But yes, I am inside of a real vault right now. It's Atlas Vault in the middle of Panama.
Okay, Duma Charlie asks, what's your opinion about a 1/4 ounce Guinea gold since it's not IRA approved?
I like it. I personally do not buy any gold that can go inside of an IRA. If you cannot put it in an IRA, then you have an additional layer of protection because it's in a different classification to monetary gold. It would be considered collectible. So,
okay, Creams S asks, hello Lynette, thank you for your work. I would like to know from you, where are the central banks buying all this gold?
Well, they're buying it in good delivery bars. There's a specific amount, and a lot comes from Switzerland, which was why when the tariffs they were going to start tariffing Switzerland at 39% for the gold. It kind of went a little haywire. So most of it comes from Switzerland that produces the good delivery bars. I think about 70% of it. That's off the top of my head. I could be wrong. I don't have that data right in front of me, but that's okay.
Okay, Randy McCoy 974 asks, do you believe that banks will charge us for saving money with them?
100%. They already do. That inflation tax, and I know a lot of people that pay monthly fees, but yes, I do, absolutely. Because the digital system is specifically being set up to enable negative rates. Once they get all your purchasing power, they must attack your principal. And officially, we have 3 cents left out of that dollar. So yeah, definitely, there will be negative rates. And when we're completely digital, there's no place to run. And even when we still have the ability to hold cash and use cash, what you're going to find is that there's a chip in that bill so that if you're holding it outside, whenever you go to use it, whenever you go to redeposit it, you will get, it will reflect, whatever you get will reflect those negative rates and however long you've held them. So it'll be compounded. This is what they've talked about. If you want to read my favorite, or certainly one of my favorite reports from the International Monetary Fund, the IMF, breaking below the lower zero bound. They put that report out in 2015, showing you, telling you how they would make this transition. It's a great report, and it's an easy read. I think that it's easy for most people to understand. And if not, and you read it, jot down your questions. Let's talk about it.
All right, I'm going to jump, just so everybody knows, we're taking the questions as they come through, but one of these just came through from a new listener and learner, and they're asking, when you say we need redeemable, are you referring to central bank issued gold and silver coins? Sorry for the newbie question.
Actually, I love the newbie question, and you should ask every single question that you have, because there's no stupid questions. None. I want you to understand this. No, what I'm actually saying, in redeemable gold, prior to 1933, if you, the citizen, did not like what the government or the central bank was doing, you could bring in a bill and you could pull the gold out of the system. That's redeemable gold. That's what gives the public their power. So it isn't necessarily the central bank or whatever, but in the monetary system, if you don't like what the government's doing, you don't like what the central bank is doing, you can say, I want the gold from there, and they must send you the physical asset, because physical gold puts restrictions around how much debt and what governments can do. That is the way. So that's what I'm talking about with redeemable gold. It could be central bank gold or what have you, but it's your ability to pull it out of the system as a citizen. This is our opportunity to take our power back. There are a lot of people out there that say, oh, well, I can't do it. And you're right. One person cannot do it alone. I can't do it. Who am I? I'm no different than you are. I've just been studying this my whole life. So one person can't, but there are 8.4 billion people on this planet. If we can get 3%, just 3%, that's what started the Revolutionary War. We get 3% of the public to demand to buy gold and silver and then demand it be redeemable. I believe that we've got a shot at getting redeemable gold back in the system again, and therefore the public taking their power back. I can't guarantee it, but here's a guarantee I can give you. If we don't try, if we don't come together and try, they're not going to volunteer that. And there's 1% of them. 1%. So guess what? 3% is a lot more than 1%. We can do this. I know we can do it. I know we can.
Perfect. I'm not going to even attempt to pronounce this name. It's written in it looks like Russian. So I'll just ask the question. Is spot silver going to fall to $40 an ounce in order to fill the gap formed at the beginning of September? Or
Oops, sorry.
Do you want to answer that part first and we can move on to the next one?
Yeah.
So the second part of his question, just to tee you up, it says, or political circumstances will push the price to increase.
Okay, there's going to be a combination of the two, because at some point all gaps get filled. But just because the spot market might go up or down, in the fully supply and demand market, if it goes down to 40, you might see this huge premium, which we've seen before, especially in 2020. And a really good indication really was the SLV, which is the silver ETF. Now, I'm not saying that you should do that, because I definitely don't believe in ETFs. However, They had to change their prospectus because they couldn't get enough silver because of the demand for the ETF. Wall Street wants you to stay in paper. And so they changed their prospectus so that all it had to do is imitate the movement of the spot market. There is not enough silver out there. So yeah, at some point we are more than likely, because all gaps must be filled. I can't tell you when, but at some point that gap will be filled. But if you're thinking, well, I'll just wait till then, don't wait. It's not worth it. We already know that an ounce of silver, its true fundamental value, not Wall Street's version. The true fundamental value is somewhere $1,200 to $2,000 an ounce. So does it really matter what you're paying for it? If it's at 40, if it's at 100, if it's at 500, if it's at 600, doesn't matter. Just get that position built, because in the physical world, there is a finite amount of it. And the movement in the paper markets are really about perception management. That is, managing how you perceive gold and silver, not the truth about gold and silver.
Okay, Colleen Allen asks a follow-up question to her pre-1933s. She says, in reference to my earlier question, would the $1 gold coin be a good coin to obtain for paying one's property taxes?
Actually, it could be, okay. What I use and I have just raw $1 gold coins. But if you call us and talk to a strategy specialist, you might be better off doing that with, say, a gold Swiss franc prior to 1948, or a British sovereign or something like that. And it's just because the premium in that could be lower, but it could be. And if you're talking to us, we can calculate that out, and then we're going to position you so that whatever you do supports what you're trying to accomplish. And we can determine how much gold you most likely need to pay those property taxes, and then guide you to what is that best tool.
And if anyone wants the number to call and talk to our strategy specialists, you can ask them all kinds of questions, and they walk you through, like Lynette was saying, your goals, what you can afford, and they create a plan for you and lay it out step by step according to what you're able to do. And you can call and speak with them for a free consultation at 833-GLD-ZANG. Again, that's 833-453-9264.
Thank you.
All right, and on to the next. So, Sign of Nature asks about promissory notes, financial instruments. How long before this debt-based system resets?
Well, first we have to go through a major crisis. Is what's happening right now, is that enough of a catalyst to send us in there? It could be, especially with the inflation, the rapid inflation that we're going to see because of this, because of all the money printing. So we're not ready for, we're already running through the reset. And the reality is day-to-day inflation is resetting the value of the money, and has been since 1913. So it's the speed of the reset that we're really talking about, not the total reset. But we need a good crisis to scare people enough, and the people that then the public loses confidence, and that will make the hyperinflation apparent. And once all of that confidence is gone and they've developed enough hyperinflation to repay those promissory notes with dollars that have absolutely zero value, which, by the way, is part of the strategy in our layered approach with you with fixed rate debt, then that's when they will do the first overnight reset. How many of those overnight resets they're going to do, I can't tell you. I can tell you that globally, on average, over these many years, there would be 3. But as we've seen in Venezuela and Zimbabwe, they're already through their 6th iteration. So it won't be it's not likely to be a one and done. And I want to see redeemable gold in there because they're going to have to do something to get public confidence back. Because why? There's more of us than there are of them. Don't roll over. Don't roll over. Don't just say, okay, have your way with me. Become your own sovereign self inside of community. Because when you ask me the timing, I can't tell you it's going to be Tuesday morning at 8:35. But what I can tell you is if you have taken the time to create surety in food, water, energy, security, barterability, wealth preservation, community, and shelter, then you are going to be in a much better position when they attempt to force you to their will. If everything you have, you're dependent upon the system for your food and water and energy and your wealth and all of that, and the government and the central banks say jump, you're going to have to say how high. But if you have surety in all of those areas and they say jump, you can say no. This is how we take our power back. And community has to be a huge part of that because quite honestly, we are running out of time. So I don't know when we're going to lose all of our choices, but don't you really want to be completely prepared when that happens? I do. It's one of the big reasons why I'm here in Panama right now.
Okay, the next one comes from Anna2462. Lynette, do you recommend selling stocks now to buy gold or waiting 6 months to a year? And what about 401k to TSP?
Those are both good questions. You have to do whatever you are comfortable regardless of what anybody says, but I'm an ex-banker and I'm an ex-stockbroker and I don't own any stocks. So what does that tell you? Now, if you have a 401k that you can't touch, if you check with your administrator, you might be able to do, and you're still working and contributing there, which means you're not going to be able to take all of it. You might be able to do what's called an in-service withdrawal rollover election. In-service withdrawal rollover election. If you can do that, then there's going to be a certain amount that you might have the ability to move into some kind of IRA. Maybe it's a Roth, maybe it's a traditional. Once it's in an IRA, then you can take a distribution. You can do gold and silver inside of those vehicles, but frankly, it makes it too susceptible, in my opinion. You do what you're comfortable with. Because a lot of times people don't want to pay the taxes. You are never going to get away without paying those taxes. But who do you want to determine what that's going to be? You or the government? Because they can change those rules at will. So for me, I did have a SEP IRA. I made the choice when we got to a certain point in the trend. I made the choice to liquidate it, pay my taxes, and then I still have a nice retirement, but it's all in invisible gold. In other words, the collectible gold. That's where my personal level of comfort is because I had my Uncle Al who taught me the value and the ability, showed me that he was holding at least 3,000 ounces of gold when it was illegal to hold more than 5 ounces any other way than in the collectible form. So that's where my personal level of comfort really is. Plus, he taught me how hard assets move from undervaluation to fair valuation to overvaluation to fair to under in a constant loop because it doesn't get evaporated away like the intangibles can. So I would not be waiting. Don't wait. Because I could tell you for an absolute fact, there are things that I was able to buy in 2002 and and after that I can't get today. It's the physical world, which means that there's a finite amount, and it is critically important that you get yourself properly diversified today. So if you can't take it out, you have a 403B and there's just nothing you can do about it, or a 401k that you're contributing to and there's nothing you can do about it, call us. We'll help you determine how much gold do you need to be properly diversified. So if those stocks and those intangibles go to zero, it's not a problem for you. You are covered. What if I'm right and what if I'm wrong? When I can do something that doesn't matter whether I'm right or wrong, I'm going to make that choice all day long because then I don't have to worry about it.
And again, that phone number, if you're looking to talk to the strategy specialist, is 833-GLD-ZANG. Again, that's 833-453-9264. Perfect. All right, next question. Can you talk about how many types of pre-33 gold coins we need? That's from Tanya Robb, 1345.
It's basically 6 layers, okay? So you would have your barterable gold, and even before that, in the cash part of the position, this is where something like a glint or a kinesis comes in to have that instant liquidity. So it's different layers. That's also where gold backs would come in and out of that cash, that first cash position. Then you're going to have some barterable gold as well as barterable silver. Property taxes, I like barterable gold. Going to the grocery store, gas pump, I like barterable silver. So that's one layer. Then above that, we're going to look at what do you need to protect. So your 401k, your 403b, your cryptocurrencies, whatever you are choosing to hold on to or have to hold on to that is completely intangible, there's a lower level of gold, and it doesn't mean the gold content. It means the blemish level and the population. How many are there? Okay, so we're going to put you in the kind of gold that's going to properly diversify and protect that. Additionally, that would also be the kind of gold that we would use to recoup when you use up your barterable position and your cash position, because that's principal. And this whole system is designed in a closed, full loop so that any taxes, any penalties, what you need to use to actually spend, we want to recoup all of that. And that would be in that second tier level of gold. Beyond that, we're going to define what your goals are, and we're going to look to the income producing opportunities that will arise. So right now, where gold and silver are severely undervalued for the reasons that we've talked about, and you have those fiat money assets that have been targeted for inflation because you see things going up and you go, oh, isn't that grand, when it's really the dollar going down? That's going to flip-flop, right? And you'll see that gold is going to hold your purchasing power, and we want to be able to take part of that and we want to be able to convert it into income producing assets when they're somewhere near a bottom. And that's another layer. And I forgot, the mortgage payment would be in that second tier. So that's another layer. And then there's an additional layer, depending upon, what you're trying to accomplish, that's even, say, legacy. This is the kind of gold, it's a lot more rare, and it's the kind of gold that is designed to be passed down from generation to generation to generation. Because we were having an interesting conversation, and I don't know if we recorded this, but Alex and I were talking, and he's the owner of Atlas Vault. And he said, we talk about 25 ounces of gold being able to buy a city block in Berlin, buildings and all. Yep, that's an absolute fact. And I've done lots and lots of studies on that. You can just do a search and you'll see, and you can go in, and of course I've got all of the links. But you also need to have movable wealth. And that's what a lot of people that were escaping Nazi Germany or other places that were suppressing people, they would put their wealth physically hidden in their clothing so that if they needed to pay their way across a border, do you think I would have any level of hesitancy taking off anything or taking out anything and paying for my children's freedom, for my freedom, for whatever we had to do? So that's also the kind of gold and the kind of wealth that you can move. It's movable wealth. Real estate isn't. You can't put a house on your back and move it, or that land and move it. So you need diversity in there as well. And I think I covered pretty much of the layers. But again, call us and we'll walk you through that as well. But there's a whole bunch of layers depending upon what it is that you are trying to accomplish. And you'll understand it. And there are stickers, there's a whole program so that you're not going to question, oh, what's this for? You're going to know. We have that all laid out.
All right, we've got about 15 minutes left before we end the stream. But again, the phone number to help understand those layers, to speak to our strategy specialists, is 833-453-9264. All right.
And they can also email in at, is it hello@LynetteZang.com?
Hello@LynetteZang, or there's questions at LynetteZang.com as well. Either one of those will work.
But we love close up and personal. We really do. It was a great event. Greg Manarino's event. I got to meet a lot of people there. It was a lot of fun. Wasn't it fun?
It was fun.
It was fun.
I had a nice time.
Yeah.
Okay, next question from Zach Wheat, 5770. What role should junk silver have in a gold-silver physical stash?
That is absolutely perfect for barterability, because you have your dimes, which is, look, this is 90% silver. So saying that a dime is a tenth of an ounce is not 100% accurate, because it's 90%. But it's easier to think about it. So a dime is one thing they did logically, a tenth of an ounce. A quarter is roughly a quarter of an ounce. A half dollar is roughly a half an ounce. And a silver dollar is roughly an ounce. So I love junk silver, which is constitutional silver. And it's the money that we actually used on a day-to-day basis prior to 1965, and then could still continue to use because they didn't pull it out of circulation. Now, of course, it's all out of circulation. It's hard to find it. But we have it, and you can buy it in bags and quarter bags and what have you. But yeah, your barterable portfolio. That's what I love that for it.
Okay, RJG Esquire asks, I have liquid emergency funds and maxed my IRA, my Roth IRA. I want to save into gold and DCA on a biweekly basis. What do you think about goldbacks and the UPMA savings and lease program?
Yes, I would not do everything into goldbacks at all, but I can definitely see where it fits in that first cash part of your portfolio, just like I can see where dollars fit or euros, depends on where you are. I can see a level of local cash, and that's where I see the gold backs fitting in, because you can get 1/1000th of an ounce of gold in the $1 gold back, and they have different denominations. So we also have to continue to grow the places that will accept them, etc. What was the question again? I'm sorry.
So they wanted to know if they save in those. What do you think about goldbacks and UPMA savings and the lease program?
I don't like leases. I want you to hold it and own it. The UPMA, I'm not really, the UPMA, because I looked at that, somebody asked about the UPMA. You got to hold on to it, and it's layers. Is there a place for it? Yes. Would I do everything in it? Not even marginally close. But depending upon your circumstances, and when I say that, it's like, okay, If you're, say, 35 or 40 years old, what have you, and you're still working, you're going to need a smaller cash position, and that's where that stuff fits. If you are retired and you're counting on your income from your investments, well, then you're going to need a larger position in that. But I can say that it varies depending upon what you're trying to accomplish. So I see it as part of it, but I definitely do not see it as all of it.
Okay. Kelvin Tan 2471 asks, when CBDCs are launched globally, how is physical gold and silver going to enable us to buy food and other stuff when everyone else is forced to accept only digital currencies?
That is a great question. Thank you for that. Because that is the beauty part. What are we talking about? We're talking about diversification. Where are dollars used? Where are cryptos used? One place. So if demand disappears for them, you're done. But gold and silver, physical gold and physical silver, is used in every single sector of the global economy. So it has the full spectrum of demand. That's why they can't inflate it away, because of that level of demand. So for thousands of years, you have always been able to convert your physical gold and silver into whatever that local currency is. And that's how you will do it this time. It all goes back to supply and demand, and make no mistake that the backwardation of gold and silver recently is an indication of a structural shift. This is so huge. A structural shift in the market toward the physical being the driver of the visible prices. We're not fully there yet, but it's definitely an indication that that's what's happening. So what you'll do is you will simply convert your gold and silver, not all of it. You're going to do it as you need to. We're going to help you with that with your strategy, but you're going to convert it into whatever that local currency is, whether it's a CBDC or a stable coin or a hoochie cooch. It doesn't matter. Whatever that happens to be, that's part of the strategy. And you do it because of demand.
Optimistic Beekeeper asks, Lynette, can you suggest the best response to those who say we only talk up sound money because we have a vested interest in it?
We all have a vested interest in sound money. And really, when I get back, we've got a little program that we're putting together, but they say that, and yet if you do, and call us, right? We can give you a chart that shows as the purchasing power has gone down, even the spot gold, manipulated spot gold market has been going up, and you see the cross there. So that's easy enough to do. We'll also we're putting this whole little program together. I don't think we need too much time after we get back before we're going to be releasing it on the live and announcing it. But yeah, we'll if you can just be patient for maybe I would say on the outside, I'm going to put my neck on the line here. Probably within 3 weeks, we should have that ready for you.
And again, to call us, the phone number is 833-453-9264. Okay, Mega Masher 91 says, poor person here, if I can't afford gold, what is the next best option?
Community, right? Silver is also a great option, and you might be able to do that because even where it is now, it's like stupid cheap. And remember, anything that's physical in gold or silver is monetary at its base. But you need to come together in community. For example, in my bug out location, I have people that are signed up that are teachers and doctors and plumbers and gardeners and farmers and electricians, etc., etc., etc. So build your talent base. And a great suggestion, I think, is to go to a local farmer's market and get to know the people that create your food. Give them a day of your time or so. You will learn some skills that are barterable and valuable, and you will also create that community, that relationship. Because when push comes to shove, if there's only so much food to go around and they know you and you've given them your time and they don't know this person, guess who's going to get it? So I would say lean in, and no matter what your circumstances, even if you have lots of gold and silver, frankly, you can't eat that. So you still have to lean into building that community of like-minded people so that you're covered and you create that surety in all of those areas. And that doesn't take anything other than your time and your skill set. And the community is, quite honestly, the single most important thing that I talk about. We've got to come together, and together we can survive this, and together we can take back our sovereignty and our power and our control. We can do this.
Spicy P8864 says, what are your thoughts on self-directed HSAs and investing in gold with the HSA?
I don't like any visibility, and I think that, we see all the time that we have less and less privacy, less and less autonomy. I mean, AI knows us ever so well. So I prefer in my holdings of the gold and silver to have it in my possession and as invisible as possible.
Perfect. MLBF8GL asks, what do you think the reason is for the pullback on precious metals?
I think that it is a function of margin calls. I think that's a big part of it. And I also think that, look, we were in backwardation. If I'm sitting here telling you, that is indicating that we are inside of a structural shift in the pricing of gold and silver. Are they ready for that yet? I don't know. So we have to have this pullback. Plus it was technically stretched a really ridiculous level away. So it really is perception management. Because in the physical only world, what are we seeing? We're seeing growing and growing and growing demand. That means, and we see more and more devaluation of the currency. And that's what was pushing the prices up, that demand and the devaluation. That's not changing. But in the paper market, spot gold, spot silver, Wall Street, when you're looking at that ticker go by, or you're listening to Bloomberg or CNBC, or you're reading it in the Wall Street Journal, or wherever it is that you're getting the price of gold and silver, well, they don't have spot gold, spot silver. They have it named as gold and silver so that you are sitting there thinking, well, that's how much gold is worth and that's how much silver is worth. It's a lie. That is a contract. A spot gold, a spot silver contract. And since it is simply a contract, there is no limitations on how much gold and silver spot, just digital, that does not nor ever will exist. And honestly, I wonder why it isn't a whole lot lower. Why isn't it? They've created so much. And they can't possibly, there's a finite amount in the physical world. So the pullback is several reasons, but I would actually probably say the single most important reason is because it's becoming visible that there is something wrong with the markets. And they don't want you in physical gold and silver, because as soon as you hold it, you own it. You can't see it, it's invisible to them, even if you're hiding or you're holding it in a private vault, because nobody else but you can get into those boxes. So that's your sovereignty. But yeah, does Wall Street want you to pull the wealth out of their system? Heck no, they make way too much money on you, from you, using your equity for their benefit. And do you remember what happened in 2008? It was disgusting, but it wasn't illegal. And there are people that never recuperated from that. And there's a growing political movement toward socialism as a reflection of what happened in 2008. It wasn't a one and done. That changed everything because, frankly, that's when the system died. The system that we knew. And then they had to scramble to create a new one. And so do I think that it's coincidence that Bitcoin came out in January of 2009 and quantitative easing, money for free, came out in March of 2009? No, that was the new system that they were putting in place. And what did they have to do? They had to get your buy-in. They had to get your acceptance. They had to get participation. And they know how to do it. Read that Breaking Below the Lower Zero Bound IMF reports. Type that in. It'll come up. They know how to make these transitions. And now they've gotten enough buy-in. And I'd also point out to you, between it was legalized in 1913. But the shift was really came in where they converted corporate debt into Federal Reserve notes. That's the money that you and I are first forced to work for. This is 1914. So between 1914 and 1933, the 1 ounce gold coin at $20. So gold, silver, fiat money, the Federal Reserve notes, and the gold and silver certificates all circulated. The $20 gold coin, the $20 gold certificate, and the $20 debt certificate, the Federal Reserve note, were all at the same stated value. People got used to it. So, and what did they do? They thought it was the same. So when they took the gold out of the system and made the gold certificates illegal, well, they still had the Federal Reserve notes. And people said, okay, well, nothing has changed. Everything changed. They're doing the same thing. Because 2009, where are we at right now? So 2009 to 2025, it's getting close to that 20-year mark. People are very, very comfortable now, or not everybody, but there's certainly a contingency that is very comfortable with the cryptocurrencies. How do they get eyes on it? They let it go up. They make you think that it's a good thing. But they also sold it as being around the system, not in the system. I mean, you can decide for yourself. Do I think it's outside of the system? Nope. And I never did. Never did.
Okay, that brings us to an hour.
Okay. Well, that's it for today. And I hope you've enjoyed this. I know I've enjoyed it a lot. I'll be back next Tuesday in our studios in the US. We'll be able to go for more time. But thank you for showing up here. Let us know how you like this, because I would like to, as I'm traveling around the world, be able to do this. So you can see where we are, and we'll have lots to talk about next week after I get back. And this whole trip to Panama, and also with Greg Manarino's event. That was great. We loved it. We've got lots of great footage, so stay tuned. Lots more to come.